In this example video, we're going to look at how we put together the shareholder equity section of our balance sheet, and we're going to look at review exercise 410. So it tells us that the Tin Man Corporation reports the following balances at the end of the current year. So we have our common stock, we have retained earnings, we have additional paid-in capital on common stock, income taxes payable, and accumulated other comprehensive income. So they want us to put together our shareholder equity section of our balance sheet. So looking at the accounts that they've provided to us, we know that income taxes payable would not be part of our shareholder equity section. That would actually be in our current liabilities. What we're going to include in here is all of the components that relate to our shareholders. So if we had preferred stock, we'd list that first. In this case, we only have our common stock. So that's going to go at first, and that's going to go in what we call the contributed capital section of our shareholder equity. Sometimes you hear it called the paid-in capital section. Basically, how much has been contributed in assets to our business in exchange for ownership rights. So we're going to have our common stock, and our common stock, they tell us, is at $5 par. We always include the par value. It doesn't list it in this case, but if we also knew how many shares had been authorized, we'd also include that, as well as how many shares have been issued. So we have $50,000 in our common stock account, which is representing the par value only, we know. And then we have our additional paid-in capital on our common stock. Again, that represents how much additional assets value we took in above that $5 per share par value. And we took an additional $200,000. So we have our total contributed capital. And again, if we had preferred stock would have been listed first, and we would have set it up exactly like we have here with common stock. We would have listed the preferred stock and any additional paid-in capital on preferred stock, and then we would have listed out our common stock and additional paid-in capital on common stock. We then also have our retained earnings, and retained earnings, we know, are how much of our earnings are we retaining or keeping in our business versus how much we've given away in terms of dividends to our stockholders. So we have a total of $120,000 in retained earnings, and then we have accumulated other comprehensive income. And our accumulated other comprehensive income is at $24,500. So in total, when we add all of this together, we have our total shareholders' equity of $394,500.